I do still believe very much in gold, and I don't think, a lot of people think that Bitcoin's going to instantly flip gold, and I don't think that's going to happen because there are 8 billion people on the planet that understand that gold is money, and it is, until Bitcoin came along, it's the soundest form of money. But the once in a humanity, I know it sounds hyperbolic, but it really, I say that because, until Bitcoin came along, everything that, and we all know that money is somewhat of a collective illusion. It's what we all agree has, exchange value. I mean, this is Karl Menger's Austrian term. I mean, it's all a matter of perception. I mean, we perceive the dollar has value because we can go buy things with it. And, there was a time when that was shells and salt, and there have been tobacco, and lots of things have been used for money, but the dollar is what we use today.
In a groundbreaking conversation with Trey Rake, Bitcoin visionary Larry Lepard set the financial world on fire with his bold predictions about Bitcoin and gold. If you think you've got it all figured out, Lepard is here to shake things up. First, the big revelation: Bitcoin will never replace gold. Despite Bitcoin's rise as a digital asset, it has a long way to go before it can rival the centuries-old dominance of gold. Lepard's reasoning is both simple and shocking. Gold's value is deeply ingrained in human history and culture. It's not just an investment, it's a timeless symbol of wealth and security. Bitcoin, while revolutionary, is still a young player in the game. Lepard also drops a truth bomb about money itself, referencing Karl Menger's Austrian economic theory. Money, as he explains, is nothing more than a collective delusion. Its value is based entirely on communal belief. Both gold and Bitcoin thrive on this concept, but gold's historical significance gives it an edge that Bitcoin can't match, yet. However, Lepard believes both Bitcoin and gold are essential in today's financial world. With traditional markets teetering and inflation rising, ignoring Bitcoin's potential for exponential growth could leave you behind. That said, Lepard is clear that Bitcoin carries unique risks that can't be overlooked. It's a high-stakes game where the rewards could be huge, but so are the dangers. In 2025, the real question won't be whether Bitcoin or gold will survive, but how they'll coexist in a new financial order. Lepard's explosive, no-holds-barred predictions are a must-listen for anyone wanting to understand the future of wealth storage. Before we continue with the rest of the video, do check out daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
Still a gold bug, Trey. At my core, I still got a lot of gold. I believe in gold. I run a gold fund. So, I think they both have a lot of merit. They're different. They have different risks and opportunities in each one. But yes, I mean, I think the idea was I want to get the common man to understand, or a woman to understand, that we are in a fiscal mess, that's going to impact their lives in terms of inflation and the stock market, which is very overvalued in the future. And that if they don't have some allocation to gold and or Bitcoin, they're likely to I think, experience regret in the next 10 or 15 years. And so yes, I'm arguing for those two things. Now, obviously, as you know, I've gone full crazy orange pill, and I think Bitcoin is a more asymmetric bet than gold, and therefore I own more Bitcoin than I own gold. I didn't start out that way, though. By the way, what's happened is Bitcoin's gone up a lot. But it's a call to try to help people to understand that monetary debasement is going to hurt them, and that the two right choices to solve that problem are gold if you're more conservative and you don't want volatility, or Bitcoin if you want to be aggressive and you want more price performance. But the price performance isn't free, as you know. We've had some huge drawdowns in Bitcoin, and people have to be aware of that when they get involved in it.
The two are almost diametrically opposite,
they are, and you're right. I do have a legacy gold fund, and I do still believe very much in gold, and I don't think, a lot of people think that Bitcoin's going to instantly flip gold, and I don't think that's going to happen because there are 8 billion people on the planet that understand that gold is money, and it is, until Bitcoin came along, it's the soundest form of money. But the once in a humanity, I know it sounds hyperbolic, but it really, I say that because, until Bitcoin came along, everything that, and we all know that money is somewhat of a collective illusion. It's what we all agree has, exchange value. I mean, this is Karl Menger's Austrian term. I mean, it's all a matter of perception. I mean, we perceive the dollar has value because we can go buy things with it. And, there was a time when that was shells and salt, and there have been tobacco, and lots of things have been used for money, but the dollar is what we use today. And until Bitcoin came along, here's the important point. Until Bitcoin came along, every form of money, every single one before, had dilution, which is to say that its supply grew over time. So the number of monetary units grew. Now, gold was the best. It grew the smallest at 1.7% a year, but it still grew. And in 50 years, we'll have twice as much gold on the planet. It's still much better than fiat, obviously. So here comes Bitcoin, and a lot of people say a deflationary currency can't work. We can talk about that, but here comes Bitcoin with a scheduled fixed supply of 21 million. That's it. And so that's different. That's really different. And I don't think hyperbolically. I kind of compare it to there was an era pre-air flight, and then there was air flight, or there was an era pre the telegraph, and then there was the telegraph, it's an invention. It's a type of money without any dilution. Mm-hmm. And that I submit that's an invention it's a meaningful invention, because we've had thousands of years of monetary dilution in history, and now we don't have it in this new form of money. So that's why I make the statement. I know it, to some people, I know it's hard to get your arms around it, and it sounds extreme, mm-hmm. but it's factual. I mean, it's a form of money based on math.
But how do you advise people to sort of reconcile Metcalfe's law and the great power of exponential, opportunity that Bitcoin has with gold miners, that you still have such a passion for it? Is there a place for both in people's portfolios?
I think there absolutely is, Trey. I really do. I think that, look, we're all old enough and smart enough to know that there's nothing in life is certain. Mm-hmm. Even the success of Bitcoin is not certain. There's technological risks, there are other risks. And so, mm-hmm. I think when you're investing, you want to construct a portfolio. Mm-hmm. And what I try to argue, I have a lot of clients who are on the older side, and I never suggest to any of them that they go heavily into Bitcoin. Mm-hmm. But I do suggest very strongly that they don't have zero Bitcoin, mm-hmm. because the upside optionality, the asymmetry, and that's basically, look, why do you and I invest in gold miners? Because we know that they have an asset which, generally speaking, the prices and the valuations are so low compared to the underlying value of the asset, that if they're able to pull that asset out of the ground on some kind of reasonable terms, they're going to generate cash flows that are, multiples of what we're paying, even total market cap right now. And so that's that asymmetry, in a gold bull market and a gold miner bull market, gold stocks go up 10, 20, 50, 100x. And mm-hmm. so that's the kind of, and now don't get me wrong, some gold stocks also go to zero. Mm-hmm. I've owned them. Mm-hmm. And but if you select them carefully and you get a balance, and you get more that work than not work, that's the beauty of the asymmetry there. So in life, I think there are room for lots of kinds of investments. About the only thing I do not recommend investing in now, even owning stocks, as overvalued as they are, there are some good stocks, particularly in the commodity space, particularly international stocks. Brazil's very cheap right now. Mm-hmm. But, the only thing I really think people just are silly or foolish to own is any kind of debt with duration. Mm-hmm. Treasury bills, 3 months, 6 months, a year, fine. You want to get your 3 or 4%, 5%, that's great. But, 10-year at 4%, no. 30-year at, 4%, no. Mm-hmm. I think that the owners of those are going to really see substantial diminution. Their wealth is going to go down.
Larry Lepard stated that while he still manages a gold fund and maintains his belief in gold, he also sees significant value in Bitcoin. He emphasized that both assets play important roles in a diversified portfolio, each offering unique risks and opportunities. Lepard stressed the need for individuals to understand how the financial environment, shaped by inflation and a potentially overvalued stock market, could impact their lives. He believes that failing to allocate some funds to Bitcoin or gold might lead to regret, given Bitcoin's fixed supply and its potential for exponential growth. Lepard categorizes Bitcoin as a riskier, more volatile investment compared to gold, but still sees it as an essential component for a well-rounded portfolio. He also advises against relying on long-term debt due to the risks of potential losses. Stay tuned as we dive deeper into more clips from Larry's interview to gain further insights on his perspective.
We both have a common friend who I circled the paragraph you mentioned in 2018 when 100% Bitcoin. And,
yes.
How do you keep yourself from doing that?
I try to be a balanced guy, Trey. I just try to recognize that nobody knows nothing. Uh-huh. Do you know what I mean?
Right. Mm-hmm.
and therefore, I look at all sides of the issue, and Like I said earlier, it's become a bigger part of my portfolio. It didn't start there; it went up a lot, and that 7 is not guaranteed. But I think if you read it and you read and understand the Metcalfe's law piece of it, I mean, that's the thing. The thing that I don't know. I mean, I'll disclose this about the book, and I wonder what your reaction to it was. But I mean, when I was writing the book, when I went and I looked at the math of how much these network businesses have increased since the IPO.
Yeah, you have that paragraph on Google, Amazon, etc.
Right?
227,000%.
That kind of just blew my mind. I mean, I'll tell you what Trey's talking about. There's a paragraph. Since its IPO, Amazon is up 218,000%. Since its IPO, Google is up 9,000%. Since its IPO, Facebook's up, 1,000%, whatever. They're big numbers. General Motors, from 1916 to present is up like 400x. I mean, so I was taught investing in a world of linear growth and PEs and PEG ratios and Sharpe ratios and all the traditional metrics that any investor learns, Graham and Dodd kind of stuff. That's what I was taught. And then along come these network businesses. I mean, in 20 years, big, powerful, almost monopolistic networks have gone up thousands and thousands of percent. I mean, we've never seen this before, Trey. And it's interesting. I confess in the book, I missed it. I mean, I remember looking at Google and saying, gosh, this thing's growing like a weed, but it's not making any money and it's really expensive. Nah, I don't want that. Same thing with Amazon. Same thing with Facebook. Do you know what I mean? And so I just missed it. I mean, networking businesses accrue value in a different way. They really do, because they kind of play, it's kind of winner take all. And so, those are the businesses. I mean, as you know, Bitcoin is a monetary network with a fixed supply, so it's accruing value in kind of that same way, right? So, therefore, like I say again, I think the important takeaway from anybody watching this and skeptical of Bitcoin is to learn more about it and accept the possibility that you don't have to buy a lot of it, but because of this network, growth and valuation growth, you might be really experience regret if you don't have some of it.
What is to prevent someone from just inventing something better?
I think it's a great question. And it's, the MySpace, Facebook argument. I think it's a great question. So primarily because the invention is actually in the proof of work and in the way the network got developed. And they could have killed this thing in the early years. In other words, I don't know if you're familiar, there's something called a 51% attack. But if the thing that the network provides is the ability to prevent double spending, right? That we know that each coin is real and therefore it can't, and you can't cheat. However, and it's based on computing power that that runs the algorithm. And now that computing power is enormous, right? There's billions of dollars spent on computers that run this. So it'd be, but in the early days, you could do this on your own Apple PC, or IBM PC, and it wasn't a lot of computing power. And so if you gained up and you got 51% of the computing power, you could put in fake transactions and game the network. Okay, that was so that's the risk technologically. Now, so if somebody comes along and they try and build another one that's similar, it's going to have a similar design. It's going to have that similar feature. And in the early days, people will, and I've heard it's happened. I'm not familiar with the cases, but I've heard this, people will attack it. And so in other words, the fact that it kind of grew up, and this actually goes also to the government risk. I mean, if 14 years ago, every government in the world said, oh my, this is a real threat to our fiat currencies, we need to make this illegal, tax the hell out of it, and threaten to send people to jail if they use Bitcoin, they could have killed it very easily back then. It was just too small. And, I mean, everyone would say, why do I want to mess with that? The governments hate it, blah, blah, blah. But they didn't. And so now we're here, and it's kind of like, in my view, it's kind of unstoppable. Do you know what I mean? It's very hard to roll back all of that history. And if somebody tried to start another one, it would be vulnerable to that 51% attack issue. So I'm not saying something better can't come along, and I always have my eyes open for that. But boy, if you look at the number of users and the size and the compute power, I mean, there's nothing even close. And so it would take something really substantial to bring something else along. And even if that happened, you'd have time to make the change. I mean, silver has kind of been demonetized by gold, and yet it's not worthless. I mean, what we're talking about would be another coin demonetizing Bitcoin. And so there would be a transition period. It wouldn't happen in 2 days.
In discussing his investing strategy, Larry Lepard explained that he strives for balance in his portfolio. He acknowledged Bitcoin's growth over time, noting its potential for exponential expansion due to its fixed supply as a monetary network. Lepard admitted that his training was based on linear growth models, but the emergence of network-based companies has shifted the investment landscape. He identified 4 main threats to Bitcoin's protocol: adoption, regulation, and technological challenges. When asked if a better cryptocurrency could emerge, Lepard emphasized that Bitcoin's proof-of-work system, massive processing power, and its large user base make it difficult to replicate. He believes that no competitor will be able to surpass Bitcoin due to these inherent advantages. Meanwhile, institutional interest in Bitcoin is on the rise, with the University of Austin setting up a Bitcoin investment fund worth over $5 million as part of its $200 million endowment. This follows similar moves by Emory University, which invested $15 million in Bitcoin. These trends suggest that institutional adoption of Bitcoin is gaining momentum, which could drive the cryptocurrency's price higher. The University of Austin plans to hold its Bitcoin investment for at least 5 years, viewing it as a long-term asset comparable to stocks or real estate. What role do you think Bitcoin and gold will play in the future of investing and wealth storage? Drop your thoughts in the comments below. For more Daily Dose Crypto News, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.